Hi guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we're tracking for you this morning. So lots for us to talk about, but the key talking point this morning is that weak handover that we did get from the US markets, and on the back of that, you have all of the Asian markets also opening in the red. The cuts are not nearly as steep, but they are seeing significant downtick right now. So Hang Seng is down around 0.3%. Taiwan looks quite weak, around 0.9% gone there. Remember, these markets had also rallied a huge lot yesterday. So Hang Seng was up around 4%. But today we are seeing some cuts on the back of what's going on in the US. The rest of the Asian markets will also come up. So Kospi is down around 0.5%. You have Shanghai seeing cuts of around 0.25%. So all in all, it is quite weak across Asia. Nikkei is the only one which is managing to, hold up in the green right now. No big move, but it is around 20 points higher as we speak. The SGX Nifty is up on your screen. It has slipped in the past few minutes, and it's currently indicating a 75-point downtick at the start of the trading session. So a weak start, but let's see how we, move from there. The start is likely to be negative for our own markets. But with that, let's also talk about the US. Wall Street began the week lower on fears that the Federal Reserve may continue tightening until it tips the economy into a recession. The Dow Jones fell nearly 500 points. The S&P 500 was down 1.5%, and the Nasdaq Composite closed around 2% lower. So all in all, you saw significant cuts come through there, led by the tech sector. Like I said, the Nasdaq was down almost 2%. But on that, let's also bring you some important opinion on the Federal Reserve's next possible move, because that is a key cue to watch now, and how equities could move going forward. Listen in.
The numbers have clearly shown that inflation is running higher than the Fed's desired target. Frankly, the inflation numbers also are clearly having an impact on the welfare of low and moderate income people. And so this is not a phantom menace. This is a real menace. The wage numbers are running very hot. We should also observe that the number of job openings, while coming down, is still roughly 2 to 3 times what the norm has been. And so I think the Fed clearly thinks it has its work to do. And as said, they're prepared to impose pain, which I interpret to mean hopefully a short and shallow recession if that's necessary.
I think the main point here is I'm pretty certain, as I understand Jay Powell, having sat next to him for 3 years and having talked to him every now and then, the worst thing they could do is stop early. They already made a mistake by embracing this transitory argument. They look bad. They stop early, and then inflation continues on or roars back, particularly driven by wages, especially on frontline workers, not white-collar workers. And then they have to come back and tighten again. That would be, I think they'd go down in the books as having done a very bad job.
I think the economy is going to be soft, and I agree with the notion we could have a growth recession, which is also known as a soft landing. And on the earnings side of things, I think that we've already taken the growth stocks out back and shot them. They've had a nice bounce recently, but we've gotten reality back into that sector. And I think the industrial sector will be fine. So I don't want us to pound the table and get wrapped around the axle about earnings. The stock market is in fair valuation, and it could go into a trading range, particularly after this big bounce over the last month. But it is not time to be a big bear on stocks. That was a year ago.
I think that what bails out the market is that we suffer some kind of a soft recession next year, and then we actually see a real economic recovery, which is something we haven't seen in a very long time. I would get ready for a very volatile January. I think the higher the market goes in December, the worse it's going to be in January. But I do think there are places to be. So the key risk right now is not being invested in any equities.
All right, that is the word coming in on how the Fed could move, as well as what the equity market action could look like. But with that, let's also bring you the final update on our global market wrap this morning. European markets ended Monday's trading session lower. So the French CAC was down around 45 points at the close. The German DAX index was down around 80 points, and the FTSE closed just marginally higher. It was just around 10 points in the green when we closed the trading session. Now, the UK services sector shrank for a second consecutive month. This is for the month of November. The services sector PMI remained at 48.2, which equals October's 21-month low figure as well. Chris Williamson, chief business economist of S&P Global Ratings, said, and I quote, "This is the toughest spell the UK economy has faced since the global financial crisis, excluding only the height of the pandemic." S&P Global's final composite PMI for the Eurozone nudged up to 47.8. This is for November. S&P Global says a fifth consecutive month of falling output adds to the likelihood that the Eurozone is most likely sliding into a recession. So those are some important comments coming in on where the UK economy is headed right now. But that's everything that we're tracking globally. Let's talk about all of the overnight cues and how they could really impact our own markets. So our entire research team is standing by with the trade setup this morning. We have Vivek, Vahishta, as well as Nigel here. Guys, a very good morning to all of you. And Vivek, coming to you first. We were just going through the global market setup. That definitely does not look positive this morning.
Well, good morning. Absolutely right. The start of the week wasn't so great as far as, overnight global markets were concerned. U.S. markets ended quite deep in the red. European markets too, very muted cues, giving, a weak handover as far as Asian markets were concerned. Also looking at commodity prices, especially if you're looking at gold prices went down yesterday almost 1.7%, briefly surging higher in today's trading session. Dollar has strengthened, and it clearly appears as though good data is bad news as far as equity markets as well as commodity markets are concerned. Crude prices fell down quite significantly yesterday. Brent futures were down almost 3% in yesterday's trading session. WTI futures were down 3.3%. Today again seeing a brief respite from the fall seen yesterday. A couple of important events as far as Indian markets are concerned. Two corporate results. So Bikaji would be coming out with their Q2 results, and also PTC India, remember this particular company on the back of the concerns that the subsidiary is facing, has not been able to give its results. But today, Q1 and Q2 results will be declared as far as PTC India is concerned. Now, coming closer to the Asian markets as well as Indian markets, Asian markets on the back of the week handover given, have started today's trading session on a weak note. SGX Nifty is indicating a gap down open as far as Indian markets are concerned.
All right, gap down open, but let's see how we move from those levels. Currently around 75 points lower on the SGX Nifty. But let's also talk about the individual stocks that you should track in today's trading session. Vahishta has that entire list. Hi, Vahishta.
Hi, Pavitra. Good morning. Let me start with Indian Energy Exchange, which has achieved 7,764 million units of overall volumes in the month of November. And the electricity volume traded has grown by 9% on a year-on-year basis. The day-ahead market has also registered a growth of 8% on a year-on-year basis. Moving on to IRB Infrastructure, wherein the toll collections have increased 39% on year-on-year basis, which comes to 3,660 crore rupees. Moving on to JSW Energy, JSW Renew Energy 2 Limited, which is a 100% subsidiary of JSW Energy, has started a phase-wise commissioning of the 450 megawatt ISTS connected wind power project, with the commissioning of the first phase of the 27 megawatt at Tuticorin, which is in Tamil Nadu. The next is Astra Microwave, which will be holding a board meeting on the 9th of December to consider the fundraise of up to 400 crore rupees. Kalpataru Power as well will be holding a board meeting on the 8th of December to consider the fundraise. Bajaj Consumer has planned to consider a share buyback on the 9th of December, which is in the coming week. And Class 8 truck orders, some news coming in from there, where in November, North America Class 8 truck orders have come in at 33,000 units, which is down 29% on a month-on-month basis. Back to you.
All right, Vahishta, thanks a lot for bringing us that entire list. And with that big dip in crude prices, keep your eye out on the regular aviation, paint, refiners. All of those will also be on our radar. But finally, let's talk about cues from the futures and options space. Nigel, what is the data looking like?
Well, yesterday was a day of consolidation, but I'll say it was a good one because the broader market performance that we saw, the mid-cap and the small caps, they did better than what the index did. Now, on the Nifty futures as well as the Nifty bank futures, well, on the Nifty, there was some unwinding, while on the Nifty bank, there was some fresh buying. So some long addition is what we saw out there. On the FIS table, well, they lightened their positions, both on the long as well as on the short side. But as we've been saying, they continue to remain net long on the index with more than 65% of their positioning on the long side. On the option side, well, they bought calls as well as puts almost in the ratio of around 1:1. But what's heartening is they started writing puts yet again. So yesterday, close to around 58,000 put contracts were written, and that's good news. And my sense is they were writing some bank Nifty options actually yesterday, because the bank Nifty put side, well, it was fairly active. Between both those two, the 43,200 and 43,300 put, well, we saw an addition of close to around 27 lakh shares. That's rather large actually for a Nifty bank contract that's seeing such a large addition. So what are the levels you're looking at on the Nifty bank? Well, there is some bit of support at around 42,900. I say this because in the last few days, we almost went to that level. We went around 42,920 odd, and we saw a bit of a bounce out there. So that's going to be a first support zone. The 20 DMA, if we break that, then maybe we visit the 20 DMA, which is a little bit deeper, close to 400 points down from there. While on the upside, the recent high will be a bit of a resistance. On the Nifty, well, there was some writing yesterday that we saw. 18,700 call that continues to see a fair bit of writing, but the 18,450 put as well did see some writing in trade. So the Nifty, for the Nifty, the 20 DMA again becomes important, but I think buying the dip closer to around that 18,550, around 18,600, risk reward could favor you. SGX Nifty suggesting a bit of a downtick. Back to you.
All right, bit of a downtick, but we're going to see how this trading session moves from there. Nigel, Vivek, Vaishta, thank you very much for joining us and prepping us up for this fresh trading session. With that, it's time for our first break on the show, but on the other side, McKinsey's top bracket. Hey guys, welcome back. You're still tuned into Power Breakfast, and here's an exclusive conversation. India is the workforce of the world. That's the word from Bob Sternfels, managing partner at McKinsey & Co. In a chat with CNBC-TV18's Shireen Bhan, Sternfels says that the future of supply chain runs through India, but asserts that the importance of reimagining globalization rather than embarking on a decoupling drive. Here is that exclusive conversation with the McKinsey top brass. Listen in.
You look at the potential that is not unrealistic to sustain 7 to 8% GDP growth per year through India's 100th birthday in 2047. You look at the potential to move over 200 million people into the workforce from non-manufacturing jobs into manufacturing and other types of technology jobs. You look at the opportunity to add 200 million women to the workforce. So I get very excited about that potential, and it's really underpinned maybe by three things. One is this notion that India is the workforce for the world. Between now and 2050, India will be home to over 20% of the global workforce. Right? So this is the workforce for the world. The second is I think the future of supply chains runs through India. You're seeing this unfold as everyone starts to think about resilient supply chains.
I want to bring up 2 points. What Mark Zuckerberg said, that maybe we overestimated the growth expectations and the growth assumptions on the back of what the pandemic did, and we're now starting to dial that back a little bit, and which is what's resulting in the kind of layoffs that we're seeing. And two, what Satya Nadella said, he said, look, don't think of tech jobs as people working with Meta or Twitter or whatever, but think of the auto companies because they're as tech can be. So do we need to change the narrative and the lens with which we look at this as well?
So there's two very different components there. Number one, as we look at the tech companies, did they get out a little bit ahead of them? Maybe. But then the question is the talent still needed? I think Katie pointed this. The talent is 100% still very much in demand, right? Because every company is becoming a tech company, right? You talk about whether it's the automotive company or whether it's the transportation companies, all of them are building new businesses. And I think that's really where some of the opportunity comes. It's not just the net new startup.
All right, that is the word coming in from the McKinsey management on how they see India and the opportunities that lie here. But with that, let's move on to some national news coming in. The government has called an all-party meeting today, this ahead of the winter session of the parliament that is scheduled to begin tomorrow. So the opposition is expected to discuss several issues at the meeting, including price hikes, the Indo-China relations, as well as the alleged misuse of the ED and CBI and intrusion of the centre in judicial matters. So all of these are likely to be on the table. Now, the government also plans to push for the passage of 16 bills during this session. Remember, later today, the meeting of the Rajya Sabha's Business Advisory Committee is also likely to be held. So those are some important, events that we are tracking through the day to day. The next big cue that we're all waiting for is that the voting for the 182-seat Gujarat Assembly, this closed last evening, and the exit polls now indicate that the BJP is likely to continue its dominance in Gujarat, with all pollsters indicating over 120 seats for the ruling party. The BJP's dominance, however, may not extend to Himachal Pradesh. Now, the poll indicates a much closer race, with both the BJP as well as the Congress likely to be near that 35-seat mark. The results of both of these elections, like we've been pointing out, will be announced on the 8th of December, and that is something that we're all waiting for to see how the election results pan out in both of these states of Gujarat as well as Himachal Pradesh. But with that, we are going to get into another short break on this show. When we come back, we're tracking all of the action from the commodity markets. There's lots going on, so we'll tell you what's up when we come back. Welcome back. You're still tuned into Power Breakfast. We've been talking about how the equity markets are likely to move today, but let's also talk about the world of commodities now because there's a lot going on there. Manisha Gupta joins us for that update. Manisha, what are you tracking this morning?
Morning, Pavitra. Well, the strength in US dollar, decline in global equities and commodities is what is impacting across sector as well. So when you look at the commodity markets, we've seen metal prices come off. The US factory orders, services sector, jobs data, all has come higher than estimates. So the markets do believe that the US Fed perhaps could tag the hike in interest rates going forward as well. We also are looking at the gold prices declined by nearly 2% overnight. Copper prices fell 2% as well. Aluminum prices came off by 1.5%. So across metals, there was a decline. Crude oil prices fell 3%, turned negative overnight. We've seen some bit of a buying coming in right now, and that is because the dollar index has declined by 0.25%. So what we look at right now is the commodity markets directly in relation to what the US dollar index is doing. Some decline there is what is led to Asian markets see a bit of a buying, but it would really be about the US Fed. Further data on how these markets react.
All right, Manisha, thanks a lot for getting us all of that action from the world of commodities. But staying with that, then let's also bring you some important opinion from Dan Yagin as well as Jeffrey Curry on how crude prices could move from here. Listen in.
The threat the Russians have, and at least they've threatened it, is to hold back on oil supplies and make the market tighter. So we're in a very uncertain and indeed turbulent waters. If we do have a global recession, but right now what we see is the oil market. Can you imagine that it responds to every piece of news about COVID lockdowns in China? And if those lockdowns are lifted, you're going to bring some significant demand into the market that has now been sitting on the sidelines.
The problem and why the market is very worried on the front end of the oil curve is what if we get a disorderly forced reopening where people self-impose lockdowns. They just don't want to go out and interact with anyone because the caseloads are rising so quickly. That's the risk that I think people in the oil market are fearful of, where you actually have a very sharp contraction in demand, and then you're reopened, and then you get the positive benefits later on. And I think that's the big fear factor in the oil market.
All right, that is some important opinion coming in on the oil prices. But with that, we're going to have to wind down on this edition of Power Breakfast. Asia is largely lower, but cutting its losses. So Shanghai and Nikkei are in the green right now, but the SGX Nifty indicates around a 65-point downtick at the start of the trading session. Thanks for tuning in. Bazaar Morning Call is up next.